Today we are going to look at the evolution of accounting, how accounting came about. That is what we are going to focus on today, and we will end it with the definition of accounting. Alright, so according to many scholars, according to many writers, many artists, accounting started in the season of civilization. So accounting started at the time of civilization, according to some scholars and some, actors or scholars. That is where they said accounting started from. But in my opinion and in my view, accounting started way back at creation. Okay, accounting started way back at creation. So we can attribute the origin of accounting to the days where God created heavens and earth. When God created the Garden of Eden, he entrusted all the things in the garden into the hands of one man, Adam. And then it is required of Adam at the end of the period to account on how those things are being used, on how he's going to cater for those things. So accounting started way back at what? Creation. If you look at the lane, okay, if you look at the path, it came all down to what? To the time of Noah, when God asked Noah to build the ark and asked Noah to take 2 pairs of each every creature. So it was required of Noah at the end of the period to account for the work that has been entrusted into what? His care. So accounting started way back from what? Creation. At the time Jesus Christ came, he chose some apostles, some people to work with. So those 12 apostles were given some kind of task to do, and it was required of them at the end of the period to account on what they have done. So accounting started way back at creation. But if you want to today we are going to base our discussion on what has been penned down, what has been written in our books, what artists have written about. So they said that accounting started at the time of civilization around 8500 BC. So they said accounting started 8500 BC. That is before Christ. Well, at this time, what was happening is that they were recording transactions in the form of what? Token clays, on a token clay. So when they undertake a transaction and it is in a similar relation, then they record it in what? In the form of what? Token. So by then we will say that accounting was at its very primitive stage, was at its very inception stage. It doesn't have any kind of fundamental at that instance. Okay, so in 13th and then the 14th century, they came out with what? A principle. That was the double entry principle. But by then it wasn't written in any book. So in the 13th to 14th century, so the double entry was actually introduced in 1340, in the year 1340. So that was after the death of Christ, so AD. So between 13th and the 14th century, the double entry principle was developed. But by then, remember that there was nothing written on it. There was no book propounded on this particular, book. So it was just something that was coined and people were using it. Is that okay? But there was a book developed somewhere 1494. 1494. That is when a book was developed by one mathematician who was living in Italy by then. Okay, so he developed the book. So the name of the person was Fra Luca Pacioli. So Fra Luca Pacioli. So he was able to develop a book on a double entry principle. That's why he has been given the accolade the father of what? Accounting, or the father of accountants, or something like that. It's okay, because he was the first person to develop something, structured, something that is some people can just get access to and read and understand. He was the first person to write a book on it. That's why he has been given that accolade as what? The father of what? Accounting. In his book, he came out with 3 books. They are very, very important. And today, most of the things the businesses do or the entities do are based on those books. So in his books that he wrote, he came out with 3 assumptions or 3 books, 3 daily books that is supposed to be kept by a business or individual in recording its transactions. The first one is supposed to be the memorandum. And then the memorandum is used in recording of what? The daily transactions and the daily activities of businesses or individuals. That is the use or the purpose of what? The memorandum, according to what? Pacioli. The second one has to do with the journal. The journal was used for recording transactions and giving them what? Narrations. So the main purpose of the journal was to give narrations, while the memorandum for recording daily activities, the journal was used for what? For narration purposes. That is the use of what? The journal. And the last one, which was the ledger, was used for classification of what? Transactions. So if you are able to classify some transactions, it will aid you in what? Summarizing it properly. So the last one, which is the ledger, was used for what? The classification and then summarizing. Is that okay? So in the book of Pacioli, he came out with what? These 3 books, or in the statement of Pacioli, he came out with these 3 books that is supposed to be kept by a business when undertaking accounting records. Is that okay? Now, if you look forward, because of the industrialized evolution, because of the expansion of many businesses, this form of what? Accounting became archaic. It became outmoded. So currently we have so many ways of presenting accounting in a meaningful and which will aid users in making decisions. So we have moved from the mechanical way of presenting accounting to a technological, age, where we even have software that is used in presentation and preparing of what? Financial statements. So that is the origin of what? Accounting. Very simple. Now let's focus, or let's move our attention from the origin to the definition of accounting. If someone asks you to explain an accounting, maybe you just close from class and someone asks you to explain what is an accounting, it's very simple. Cast your way back to the daily activities or the daily things you do. Assuming that your mom gives you money when you want to undertake a project, or you are coming to school. Your mom gives you some amount of money, and then at the end of the period, you call your mom that the money has been exhausted, the money is finished. Then your dad asks you, well, how did you use the money? Your dad or your mom asks you, how did you use the money? You started accounting to your dad or mom that I used the money to buy pen, we paid use, we bought so and so. That feedback you are giving to your mom or dad is what we call accounting. The process by which you take in giving feedback of how you have used the money is what we call accounting. So accounting, we say, is the act of identifying. So you identify a transaction. If you identify it, what do? You record. After recording, what do? You analyze. After analyzing them, you summarize. After summarizing, you present it to the end users. So before you present it to the end users, you interpret it. So in accounting, you have something like accounting ratios. Those accounting ratios are used for the analysis and what? Interpretation purposes. Is that okay? So accounting is just an act of what? Identifying, recording, summarizing, analyzing, interpretation and presentation of what? Financial information or financial transactions. That is the definition of what? Accounting. So today in our lesson, we look at the origin of accounting and the definition of accounting. Thank you. Thank you for watching our video. Please don't forget to subscribe to our channel for more of such valuable content on all business related courses.